Before you are 10 of the largest companies in the world, chip makers, smartphone manufacturers, software giants, EV producers, companies from completely different industries making entirely different products. But what do you think unites 9 out of these 10 companies? Directly or indirectly, they are all tied to artificial intelligence. NVIDIA produces chips for neural networks. Microsoft invests in OpenAI, the creator of ChatGPT. Amazon and Google are building massive cloud platforms for AI. Meta is developing its own models. Apple is integrating AI into every device. TSMC and Broadcom provide the microchips powering all of this, and Tesla develops autonomous driving systems. Today, the operations of the world's largest corporations rest on one single idea, that artificial intelligence will become the foundation of the future. But what if this idea itself is a bubble, the very bubble holding up the global economy right now? You may have seen the headline that Oracle co-founder Larry Ellison just became the second person in history whose net worth surpassed $400 billion. And yet, most people have no idea who Larry Ellison is or what Oracle actually does. Oracle is one of the key infrastructure providers for the global AI industry. In September this year, OpenAI, the developers of ChatGPT, signed a $300 billion deal with Oracle. Immediately after that announcement, Oracle's stock surged almost 50%, pushing Ellison to the top of the rich list. Oracle then used this newly inflated market value to buy NVIDIA hardware for its data centers, which instantly boosted demand for NVIDIA chips, sending NVIDIA's stock to a new all-time high. And then NVIDIA reinvested around $100 billion back into a partnership with, guess who? OpenAI. You see the loop forming? Money is spinning inside the same closed ecosystem, creating the illusion of endless growth. AI companies are inflating each other's value without generating any real economic return. Oracle grows because it buys NVIDIA hardware. NVIDIA grows because it sells that hardware to Oracle. OpenAI gets new funding to buy infrastructure from the same companies funding it. And all of this is being presented as a technological revolution. But what do we see in reality? According to MIT, about 95% of corporate AI investments have produced no profit, meaning almost all of these billions spent so far are pure expenses, without returns. Yet investors keep pumping money into these companies, expecting infinite growth, even though meaningful breakthroughs are barely happening. OpenAI is jumping from project to project, from animation tools to adult content generation. NVIDIA continues flooding the market with new chips even as profit margins drop. Meanwhile, since the release of ChatGPT, the Nasdaq 100 has doubled in value, driven primarily by AI-related companies, especially NVIDIA. This kind of growth no longer looks rational. It resembles a stage of collective euphoria where rising prices themselves become the reason to buy. And just at the height of this euphoria, someone returned. Someone who has seen this before and once predicted exactly how it would end. That someone is Michael Burry, the investor who predicted the 2008 housing crash. After 2 years of silence, he suddenly returned to Twitter with a short message. Sometimes we see bubbles, and sometimes the only winning move is not to play. He then posted several charts showing cloud computing growth is slowing dramatically despite record AI investment. Tech investment levels have reached the same heights as the year 2000, right before the dot-com crash. And the biggest AI companies are simply investing in each other, creating artificial valuation loops. Exactly what we just discussed. A few days later, news broke that Burry opened massive short positions against 2 of the biggest AI players, NVIDIA and Palantir. His portfolio shows over $1 billion in put options, bets that these stocks will fall. At the same time, he is holding call options, bets on growth in Pfizer and Lin, defensive stable sectors like pharmaceuticals and energy. This looks like Burry is actively hedging, protecting his portfolio from a potential collapse in the overheated AI market. But what exactly did he see? Let's keep going.
Today, companies around the world continue pouring hundreds of billions of dollars into artificial intelligence. But the actual return on these investments is still close to zero. As I mentioned earlier, MIT found that around 95% of all AI investments have produced no real profit. And even more surprising, around 40% of companies use AI only for simple tasks, writing emails, summarizing text, generating notes, basically boosting personal productivity, not increasing revenue. Meanwhile, giants like Amazon, Google, Meta, and Microsoft invested roughly $300 billion into AI development in 2025 alone. To put that into perspective, that's more than 1% of the entire US GDP. It's more than the entire annual economy of Finland or Greece. And while earlier it was still possible to say, these investments will pay off someday, it's becoming increasingly clear that companies now are simply buying time and buying belief that AI might become profitable in the future. But here's the most important part. White heavy checkmark, all this spending is happening not from real profit, but mostly through debt. Look at the numbers. Google increased its debt by $10 billion this year. Meta's debt has grown by $28 billion since 2022. Microsoft's debt jumped from $27 billion to $46 billion within a year. Oracle's total liabilities are approaching $90 billion. These debts are growing much faster than the actual profits of the AI industry. But what's even more interesting is how companies hide the real picture. Take Meta, for example. They're building a $30 billion data center called Hyperion. But instead of paying for it directly, Meta created a special project entity that takes on the debt, meaning the debt doesn't appear on Meta's main balance sheet. Formally, Meta looks clean, but in reality, they are still responsible for that debt. This is extremely similar to what happened before the 2008 financial crisis, when banks and corporations hid debt inside shell companies and off-balance entities. Everything looked safe until someone asked for their money back. And if this reminds you of 2008, there is another parallel, the late 1990s, right before the dot-com crash. Back then, tech companies poured billions into internet infrastructure. Economists were warning for years that the market was overheating, but the market kept rising anyway for 3 more years. Why? Because as John Maynard Keynes famously said, markets can remain irrational longer than you can remain solvent. And how did the dot-com bubble finally burst? The Federal Reserve began raising interest rates. Money became more expensive. Liquidity disappeared. Companies that depended on constant new investment lost funding. Investors pulled out of unprofitable projects. And the bubble, built entirely on cheap money, finally popped. Today, we have a similar setup. Yes, the Fed is currently lowering rates, making it easier for speculation to grow. That's why AI stocks are skyrocketing. But history tells us, white heavy checkmark when interest rates eventually rise again, ! That often marks the beginning of the end for speculative bubbles. Right now, everyone expects rate cuts. But if inflation spikes or the economy overheats and the Fed is forced to tighten policy, we could easily see a repeat of the year 2000. We already see warning signs. Take Palantir, for example. They reported 63% revenue growth and a record number of new contracts. And what happened next? Their stock dropped 10% the very next day. Because behind those impressive numbers, there was no real cash flow. Investors are starting to realize that revenue growth is not equal to real economic value. Now, what picture do we see today? Money in the AI industry is circulating in a closed loop. OpenAI receives billions in funding, sends those billions to Oracle for infrastructure. Oracle uses that money to buy NVIDIA chips. NVIDIA reinvests money back into OpenAI, and the cycle repeats. One company's inflated market value becomes collateral for new loans, new bond issuance, new rounds of investment, more speculation, everything keeps spinning on paper. According to JP Morgan, AI-related corporate debt has now exceeded $1.2 trillion, and total obligations already make up nearly 9% of all US corporate debt. This is starting to look less like innovation and more like a new type of credit bubble. On the outside, everything looks beautiful, but the structure beneath is held together by borrowed money and mutual promises. And what do we see now? We see the exact same pattern repeating. The largest corporations in the world are building their business models on the idea that AI will transform absolutely everything in the future. But as we've already discovered, the money in this industry is simply spinning in circles. Some companies borrow, others buy, and a third group reinvests the same borrowed money back into the system. Everything looks great, stock prices are rising, market caps are breaking records, everyone is celebrating. But the real profit simply isn't there. We've seen this before. White heavy checkmark the late 1990s, right before the dot-com crash. White heavy checkmark the year 2000, right before the collapse of the debt market. White heavy checkmark the mid-2000s, before the housing bubble burst today. The wrapper is different. Instead of internet technology or mortgage-backed securities, we now have artificial intelligence. Yes, everything looks good for now. Investors are happy, companies look wealthier, and the market keeps setting new highs. But back then, everything looked exactly the same right before everything collapsed. So the real question isn't, will this end someday? Because it will. The real question is, white heavy checkmark, how long will this last before the bubble finally pops? And this is where you come in. What do you think the AI boom will lead to? Do you believe it's truly a long-term revolution? Or is it just another bubble driven by hype, cheap money, and corporate optimism? Let me know your thoughts in the comments below. I genuinely want to hear your perspective. And as always, if you found value in this video, please don't forget to support it with a like, a comment, and a subscription if you haven't already. Share this video with your friends. It helps our project grow more than you can imagine. I'll keep bringing you useful and insightful content. Thank you all so much for watching and supporting the channel. I wish you a fantastic day, great energy, and as always, financial success in everything you do. See you in the next video. Take care.